All right. I hope everybody can hear me. And this is going to be a live broadcast today. But first, let's get some business out of the way because I don't want some newbie saying, Lewis told me to do this and I lost all my money. So understand that trading futures, options on futures, and retail off exchange foreign currency transaction involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. The following information is an expression of our opinions and is provided for educational purposes only. Okay, now that I got that out of the way, let me go to my share screen. Hopefully everybody can hear us. All right, to me, we talked about the opening. If you listen to what I said, that I thought that today would be a difficult day, and I was concerned that I didn't want to sell the opening. Even though we got a bit of a retracement, I didn't want to sell the opening because it looked like we were truly entrenched in an up market. We got some good financial news today. But I think the important thing is down there in the 1800 area. So this rally is starting at 1872. So what is that, about 10,000 points lower than we are right now? Yesterday when we bounced off the bull bear zone, I think it was at 1882 yesterday. So I don't know, when it moves like this, the handles and everything, it gets a little hard to stay with it. But so to me, today is starting to look like a trend day up. We've only got basically three rolls across, and we still keep going up and making new highs. They don't take this D, they don't close this D in bracket E, or that, I think that you're going to start seeing the market go up. Now, here are the targets we're talking about. This is a real simple one because this software, this Inside Edge software, shows you 1.5 times the IB range, which is 1976. Okay, and for people who don't know what the IB range is, it's the high and the low of the first hour of trading. So bracket B and bracket C. If you're not familiar with profile, these are all done in different brackets. They're 30-minute brackets. Okay, so if I separate it there and there, you can see, and here, okay, so the high of bracket B was here, the low of bracket C was here. That gives us an IB range, and then that's how we determine 1.5 times the IB range. So we take that and we multiply it and we get to the IB range. All right, so looking for this 1976. This will also correspond with what we put out to you today. Now let me show you how I got to 1976 early this morning and 71.5. So we talked about filling the gap, right? So we filled the gap here, all right, at 1968. I talked about that on the opening pre-market. Be careful. I think the market's going to have an opening drive up to the gap, okay? Then I take a look and I look at where this started from. So I go to P, look at that, 1976. That break started from P. And it happens to be 1.5 times the IB range now. So I'm getting consensus, a couple different opinions that 1976 is a good number. Look at the high right now, 1975.75, okay? So 2 times the IB range will be at 1982.5. But look what we got here. We have 2 single prints, 1980 to 1981 quarter. So this is going to be one of these days, in my opinion. So then I go and I look at other things that we use. This I can't pronounce, but this is called the Ishitumutu or something like that. But if you see it, this is a good tool, right? So when I look at this tool, all right, we broke and we got inside of here, okay? And the key to this tool is if you're above all this stuff, okay, all right, or you're above it, then you want to stay long. All right, now this is telling us it could retrace back to 1967. Look at all the things that we have in 1967. This is the top of the first 5-minute bar. All right. It's also the top of our middle. Okay. So a retracement back to here is likely, but you're going to have to get inside of here for this to make a market turnaround. Okay. Market turnaround. So take a look at 1976. We were what, one tick from it. So I think we're still getting brackety. We're going to get it. And I think, and then you take a look at also what I put out was 75 is a high volume node. Other people that don't understand profile, see this here? This is lower volume. This is high volume. Okay. Up here, these are high volume. Okay. The market likes to go from high volume nodes to low volume nodes. All right. So for me, this was a pretty, here we go, 76 half. Okay. I'm looking now. My next target are these single prints up at 81. Okay. And there's nothing here telling me that I've got to fade this move. Don't get in the move in the way of it. And this is the things that we've kind of developed. All right. And we've got this in our here, right? Here's our CCI. Let me put it up here. All right. This is on a 15-minute basis. I can go to any time frame I want, but this is telling me don't. So here's our bar down here. It went from gray today to green. It's been nothing but green. Even though we had this breakdown here, all right, we came down, we crossed through here. This is 7:30. This is 8 o'clock. We crossed over, okay, and that's it. We're back above it. So there's nothing telling me that I should change my opinion about the market going up. All right, now the green line is now getting to what we call the oversold area, right? And so I'm going to think about if I have multiple contracts, I'm looking to get out of the multiple contracts, okay? So looking at my target up here, this is my next target, was like 81 to 81 and a quarter, okay? So, and then 2 times the IB range, which be 82 half. Above that, I've got to go and start looking up here, right? And, you know, where there's other targets. So to me, I mean, it's kind of simple that we've kind of turned into a trend day, all right? And so I look for, now that we're getting above here, if I've got some positions, as you can see, I just got out of some of it, and I'm staying above, looking that we're at the oversold, and you know, this is a good place to flatten out. If they don't close this, if they come back in here, right, and not close this up and just mirror it on the way down, I think we're going to be seeing, I mean, this could be, you know, another 2,000-3,000 points up. I mean, we're already up 3,800 points, right? So what we've seen for the last couple weeks, that 8,000 point moves are not a big deal anymore, right? So these are the things that I'm, you know, sharing with you now. I should hopefully is, you know, that you're probably on about a 20-second delay or 15-second delay based on the people that are out there. Now, I'm going to open this up to questions. You can type your questions right into YouTube, or you can put them on Twitter, and let's talk about different things and where we're at. No questions yet? Everybody likes what I'm saying?
It's delayed.
Oh, it's delayed. Okay.
You're asking for questions. How do you get back into the trade? I got stopped out at 71 before I could move my target.
1971 or down below?
I'm assuming 1971.
Is he putting a?
Yeah, on the top.
Question from the V wants to know how do you get back into a trade? You got stopped out at 71 before I can move my target.
Well, you know, remember one of the things that we're looking at today, okay, is our average rotation is 500 points, okay? So I'm looking here at 1977, 75. You know, that would bring us back down to 72 area, right? 500 points. So that would be back over here. I would be looking to, you know, get back in a trade over here after we get a full rotation, okay? The problem when we get trend days is that you get these trend days and then you don't get the average rotation. You get like half of it, and then the market keeps creeping up, and then it start creeping up on low volume, right? So it's a kind of flip the coin. I always look for the rotation to get back in, okay? And for me right now, you know, if the market got back into here, right, and we covered this up, this would be a good place for me to think that I'm going to start getting long, okay, all the way to 67, okay, and you know I'm not on it. I mean, if I want to really be sort of ballsy, then I'm gonna wait for it to get below here, the bottom part of my middle, which is 60 even. But you know, I just think that today is already proven the fact that we're gonna. And then I look at the CCI. If I see the CCI kind of flatten out and just stay on a line right now, volume's still going up. I'm looking at advanced decline, right? You gotta kind of, you know, gauge yourself by the fact that the market, you know, you get stopped out sometimes, and then you gotta have to, you know, don't get emotional and put on a trade that, you know, that's gonna be you know, go in your face. Look, the hardest part about trading is taking care of the heat, right? If you could, you know, like if you'd have bought the opening, okay, it went up a little and then went back down. When we got back inside of here, right, instead of starting to buy in here, okay, 56, 50, you know, the 56, 57 area. And by the way, let me show you another thing. So this is why you got to use multiple indicators, right? So when I was looking at the morning, I kept looking at bracket A. So after the news came out, so I was thinking 59.5 would be the first place I would want to buy it. The overnight mode, okay, right there. And then you take a look at the bottom of this is 56.25, okay, kind of coincides with right here. Look where the support in the in this, what's this called? He should. Let me. I always say it wrong, so you guys should be able to know what it is. I'm not sure. It's called Hishitomito or Hishimoto or whatever. I don't know. My Japanese is not very good because my English is not very good either. So, so I kind of look at this, right? I'm going, so, and then these purple lines are something that we always put on our charts, right? Since there is no more opening range anymore, we like to look at the first 5 minutes range as something that, and look at how the market was contained in the first 5 minute range, right in here, back and forth, back and forth. We had a little bit below it. Once we got back inside of it, and now above it, boom, right? So this is another little tool that we use on our indicators, which shortly, people, they're coming out. They'll be out. You'll be able to get our screens and take a look at the things that we look at and talk with us. All right, I'm looking at this here. Look at how it's kind of topping up here, right? Got a little rounding at the oversold area, okay? So I'd be looking, for the market to, pull back into this area. This would really be a good spot. 69, 67. Am I going to get some heat in this area? 72 would be, well, so 500 points would take us to 72, 75. So we're right about there. I mean, there's a 500 point retracement from there. What's 1972, 75 minus 500?
67.
So 2 retracements would put us at 67. Okay. So once again, those are retracements. You look at them, and it's really funny how those things all line up with what they're talking about, right? The Hashimoto is telling us that the market could go here, still up, it's still bullish, but it's saying that the next projected area is 68.5. This is how you read this, okay? And we still got the top of the 5-minute range. Volume is now dried up a little bit. So those are the things that you have to kind of look to get consensus. I got our CCI still green. MACD is starting to, back off a little. So, but we're still, there's nothing here that's saying, hey, let me take a shot and get in front of this thing, right? I'm not going to do that. I'm not going to do it. It's just, I'm not looking for, even though I feel that it could back off to here, okay? I don't want to take that chance and get short, all right? And get short and then just have it blow up in my face and keep going higher. Now, one of the things you can do, if you want to not take my advice, you can get short here and put your stop above here, this E. Okay? That's where I would put it, above 74. So I'd put it like at 74.5. Okay, if you wanted to take a shot. But when it gets choppy like this, that's like a wish trade, So I'm just giving you different ideas, different scenarios that I look at, right? So any other questions?
I got one over here.
Go ahead.
Question from Ed. He said, he wants to know, hypothetically, what were your long entries before you exited?
Here. All right, so even without this, can you see me? What's wrong? Someone said, ooh.
No, that was me.
Why are you oohing about? Oh, you're trading over there. Outlook?
No, somebody asked how you felt or what you thought about CL rallying. I didn't even see that. It shot up a lot.
Ah. Yeah, you're supposed to be watching the crew there, Luke. What are you doing, buddy? All right. Here's what we got. So here's the opening, right? Bracket B. All right. We made our high. And then I told you my first, I would right here, the bottom of A. So 59.5 was a pretty good idea where I thought that this is where I should start getting long. Okay. All right. Then I take a look at the overnight mode. Okay. And that was there. Okay. And then, so I looked at this chart and I said, okay, a retracement. Sorry. A retracement into here. Okay. You take a look at this. This is where you want it, how did I screw this up? Hold on, let me see here. Make it a little bigger so you can see it. So take a look at this line here, 57.5, right? That's telling me, all right, and then right here, the bottom of this. I mean, you're not getting out of, unless it gets out of here, this middle, okay, of this, and this is where we had our 5-minute pivot, okay, down at 51. So I know this was like a 500-point risk because I would be looking to stop myself below 51, all right? So this gave me a couple different consensuses, right? Bottom of A was 59.5. Overnight mode was 57. I go over to my Hashimoto here, and it's telling me that we got support over here at 57.5. All right. this line here is telling us we're at 55. So I'm looking at this, and then I look at where it came from, and then I'm looking at my 5-minute pivot saying, this is where I want to start initiating my longs. All right. So even though we had a 10-point break off, you could have sold the opening, it went up, and you had a 10-point break. To me, remember, these proprietary pivots that we have, the 5-minute pivots, I tell you all the time, I do not like to trade against my pivots. We've been using these things too friggin' long to argue with them. Okay, we have an idea why they work. That's why we program them. And so I had a 5-minute pivot on all the sisters except for the NASDAQ, right? So when the NASDAQ finally broke through and went to a buy, I had consensus on all 4 of the indexes too. Does that make sense? So even if you didn't have this chart, I would have been looking the bottom of A, which was when the news came out. Okay. I would have been looking at the overnight mode. Okay. All right. And I would have been looking, I had my 5-minute pivot. I mean, I can't say I don't have the 5-minute pivot, but let's just go to this chart right here. Okay. Let's just go to this chart. All right, and I'm gonna close this down. I'm gonna just make it smaller. All right. So look at the market action, right? Okay. So when I look at bars, I see this bar, I see this bar, I see this bar. They're all kind of connected, right? We went back down through here. Look at this break down to here. Okay. So these bars are still connected. We didn't take this bar out, right? So right in here, this 1946 area, this was, this is important. We didn't take, and I look at the biggest bars, right? I kind of look at the biggest bars because they mean the most to me. So this high, and I would take this low because these two are kind of connected, right? It's a 15-minute bar. All right. And so we kind of consolidated in here. We didn't take this out. Okay. And then on the opening, we had this big, long 15-minute bar, right? But look, it didn't take this bottom out. It didn't take any of this out. Okay. And is it, coincidental that when, we got back in here, and then we rallied, and then is it coincidental that once we got through the top of here, that it just, took off to the top? No, because this bar was the most influential bar, right? And even though we got down below to made a lower low, then this bar, we got back inside of the 5-minute range in that 15-minute period. So these bars taking back this red bar from the opening there's like 5 different tools I have here along with my opinion, right? And if you listen to what I had to say this morning, my opinion was I thought I didn't want to sell the opening. I thought that the market could have an opening drive up, and that the market looks like wants to go up to the upside. So that's why I did the things that I did this morning. Okay. Any other questions? I'm sure there's a lot of questions.
There's a ton of questions.
Huh?
I got one here from Carlos.
Okay.
Carlos said, thanks for the great job you guys are doing. Mr. B, can you talk a little bit about how you use rotations?
Okay. So let's just talk about, all right, so let's go to the low of the day, right? So here's the low. Now we don't know it's the low of the day, but it put it in, right? Right? It's currently the low of the day. So I look at this and I go, okay, and I asked Luke and Anthony, they calculated. I go, what's the rotation? Now remember, this is in bracket C. Now we made the low, so 500 points from that would put us at 1961. I look at 1961 and I go, okay, we rotated up to here. All right. So that was 1 rotation up. I like to see 3 rotations, but when you take a look at B and C, it put us back inside value, right? Forget about D. That rotation put us back inside value. So you'll see that the market will fight in this area like it did, right? And then, So 61 was my first rotation, okay? Then, after I got that rotation, I like to look for 3 rotations up. So 3 rotations from the bottom would have put us where, Luke?
What's the bottom?
So 1500 from
56.
56.
61, 71.
So then you go to 71, right? Which, remember, was our target that we put out today, 71 and a half, all right? So once a rotation, so now, why didn't I sell this rotation, okay? Because I got my pivots and I've got this telling me we're in a bullish mode. I've got a lot of congestion in here and consolidation. So when I saw that the first rotation does not stop the market and go the other way, all right? So you look at bracket D. So you sold it, and even in bracket D, you'd have got 4 ticks, and boom, the market turned around and went the other way, right? So that's telling me we're going for the second rotation, right? Then I look and see how it performs at the second rotation, right? And I told you I like to look for 3 rotations. They usually complete themselves in 3 rotations, right? So that's how I use rotations. I look at where the highs and lows are. So it's like the same thing. I can do this from the bottom, from the top, right? So I can go here and say, okay, I think the market can pull back to 72. Well, it started here, right? We had a pullback to 72. The second rotation would put us at 67, which would be at the top of our middle, right? And we are in an oversold area. You know, a pullback to here is not going to kill me. And see this big long green bar up? Okay. See how it's still kind of connected? If it got under here, I'd start worrying about the market going back the other way. Under this green bar, right there. This big long green bar. Okay. So the key is, you know, you take your 500-point segments and you look and see where they are relationship, the highs and lows, and how many rotations you are from those highs and lows. Hopefully that answered your question.
How do you use stops? Do you use time-based stops?
No, I do not use time-based stops. I use stops from sometimes so like when I create our middle, all right, the way I would use stops now is that right now, the market, as far as I'm concerned, all right, so take a look at this. Our 5-minute pivot is now moved up to, what's that price there? 58.75, okay? 58.75. So if the market came down and took out the 5-minute pivot at 1958.75, okay, I would then be thinking about getting short also, but only if we get back inside 1957. So I would have stops. So you got 58.75. Let's go to 58.75 over here so you can see it. All right. 1950. So I would be looking to put a stop somewhere right below here, like 16.25. To me, if it got under 16.25, this market could take the whole day back and go back down. All right. So that's the only way I would trade those stops. Okay. So I use stops for, if you're talking about market entry, that's how I use my stops for market entry. I do the same thing with my positions. I look for the places where the market came from. Looks like where it would have to get above or below, and that's where I place my stops. And if I'm placing my orders in, my risk reward is, you know, I try to keep my, you know, my 200-point risk to 500-point gain. So that's where I try to put my entries in. All right.
Maybe explain how you use VPOC and value areas.
Okay, so today, all right, today we're way above way above value. I mean, 1914 half is the value area, right? We're way above it. So now I have to look at prior value areas, okay? Prior VPOCs and today's value area, okay? So today's value area right here is at the top, 72 half, okay? And here is 64 is the point of control. All right, this is the mean, which is the halfway point for the today's value area that's been established. So today's value area is 1960 to 1972 half. All right, so like I said, I would be looking if the market got back inside value. Now I'd be looking at rotations. Okay, if it got back inside value, I'd be looking for it to close up in here. But I'm not going to get in front of things. I'm not doing that until I see that we're starting to take out this bar right here. We get below 57, okay? I get my CCI, right? And I look to see, my MACD is slowing down. Is this going to cross over on the 15-minute? I can look on the 5-minute basis, all right? So then you ask how I look. I look at value areas, right? So now I look back here. So I look at previous value areas, right? So we knew this was a gap opening, right? And I take and I look at this bracket P. Look, MNP, right? So when we filled the gap, I went to look to see where P's high was, and lo and behold, where it was 76 and a quarter, which was my target I put out at like 8:30, at like 9 o'clock, right? And then I looked at single prints, right? Okay, and this, if we got back inside, we'd be getting inside the value area of, what is that? What date is that? I can't see it. We'd be back inside the value from the 21st. Okay, so then I'd be saying, oh well, we're back inside here. I think the single prints are going to get filled, and I look for other areas such as up here. So look, value areas are just are is a map, a roadmap of where the market's been, and where it's been is usually becomes a magnet. So you kind of got to look at the value areas as a roadmap to what's going on. Now, I've showed you a lot of profile here today, right? But I'm going to tell you something right now. The profile is not a trading tool for making your trading decisions. Your trading decisions have to be made based on other factors, such as things that we've developed, like the pivots, like bull bear zone, like the 5-minute ranges. Then once you've decided, then you kind of look at it, right? So right now I'd be looking for, because now we talked about, so Carlos, you asked about rotation, right? Well, we didn't stop at 72 and a quarter, right? So right now I'm thinking that bracket F could fill in down to 69 and a quarter, right? This is telling me this is still going up. This is telling me right here, I'm looking at this, that it's looking for at least 70 half, okay? So these are the kind of things that you look, right? Here we go, 71 half. Let me see if the profile will fill down back into here, okay? Now we're back inside value for the day, all right? Remember, 2 rotations would put us at 67 right here, which would be the top, for me, the top of the our middle. Once we get back inside our middle, okay, if we got back inside our middle, then I'd be getting suspicious about if the market is getting ready to go and test the other end of the middle and so on. But I'm going to tell you right now, I am not going to flip a coin about, I want to sell the market, right? See, because here's what could happen with the profile. This could fill in right to here and then stop and rally back up to here and then go back down the next area. So these are things that I just look at, right? So, we're back inside value for the day, right? So, conventional wisdom and profile language tells you we're going to go back and try to test the VPOC at 1964. So right here is still the most volume traded on the day is at this price, 1964. Okay, all right. So it's going to revert back to here. Well, what if, and this is what happens when you try to use this as a trading tool, the market's going to 64. Well, there's a lot of other things it has to do before it gets to 64. The first thing is it has to take out 67. Okay, because that's the top of this 5-minute range. So it could get to here and stop. So my point is, and what happens if we just keep put more volume here and then the VPOC moves up to here? So that's why I'm telling you, it's hard to use. You use a profile to help shape your opinion, but don't use it as a trading tool. I hope that explains it.
Once in a trade, you use low volume nodes as targets.
Yes.
In trending, that is.
Yeah, it's trending, low volume nodes and high volume nodes. Definitely. Like if you look today, we put out early this morning. I mean, I can go back on Twitter and have to show you. Like look at 1975. So it's I go 1975, 76. These are high volume nodes compared to the rest of the stuff. And then you go back and like I said, you look for all the different consensus that gets you to the fact that you think you're going to get. So 3 rotations from the bottom was 76. 1.5 times the IB range was up here at 76, right? So, look, everybody's got the same tools, right? So the astute traders and the algos are built around math, okay? And by the way, it's been a great trade since the algos haven't been around because they're starting to, if you look at the volume now, they're starting to pick up a little because our range is shrinking, but the high frequency guys have been virtually gone because they can't pick anybody off. So, and they don't want to ever try to get in a trade with their own minds. So, any other questions?
Pretty much covered everything, guys. We're getting a lot of questions about the future of MOM, what future plans are. We're gonna have a trading room. We're gonna do some sort of education.
Yes. We've got a lot of. Trust me, in the next 60 days, everything will be clear. There's going to be a platform. I mean, there's going to be a way for you guys to get our charts, okay? And there'll be a way you're going to get in our trading room. If you get our indicators, you'll be in our trading room and our closed Twitter. And we got some other programs that we're going to roll out in the next 60 days. I have not put out. We do have a landing page that I'm going to start gathering the information for it. But I don't want to miss the launch. And when I put it out, we'll probably be at least 30 to 40 days from the launch, and we'll start gathering names and getting everybody out there. So it's been a painstaking in the last 3 months trying to get all these things programmed. So stay with me. We got more to come. See how when you get these trend days, you just kind of just sit up here and it's just what happened there. Something disappeared.
What?
My dome disappeared.
Huh.
I don't know what happened.
What are appropriate post-market activities?
Post-market activities appropriate?
As a trader.
Good day. You go to the bar. You get drunk. If you're single, you look for someone to hook up with. No, I'm kidding.
What volume profile do you use?
We use Inside Edge. We do not have a financial range of the Inside Edge. I don't get a kickback. I've been friends with Charlie and Peter Nanis and Charlie Cochran for years. Charlie is one of the leading proponents of volume profile, and his software is very good, very useful. And so go to Inside Edge, and you can. I like it because it it has volume profile in it, but it it has the ability to split. I can split the different letters, meaning that the different what do you call those time segments on the Merfolk? What do you call them? Brackets. Brackets. I'm sorry. So people don't realize that those are brackets that were instituted on the floor, and so when we were trading on the floor, you had to put different things on your trading card besides the buy, sell, opposite broker, price, clearing firm. You had to put what bracket the trade happened in. So when Stottlemyre started doing profile, he was using brackets as the time frame, which were 30-minute time frames. So that's why profile is usually given in 30-minute time frames, right? So now we filled in it at 69 and a quarter, right? So right now this is telling me, if I'm using profile, it could trade down to here, which is 67, which is everything else told me that, right? So the only thing I'm concerned about is if we get out of our middle, okay, and can take my 5-minute pivot up. So also, oh, what's that? The Russell is going to sell. So let me show you this. So here's the Russell. Here's the 5-minute pivot for the Russell. It's in a sell. Here's the NASDAQ. It's in a buy. Here's the green. And here is the Dow. Okay. So I need the Dow to get under 16,408 for it to turn negative. I need the NASDAQ to get under 42,5875 for it to turn negative. So I always look at these indicators to see what the other markets are doing, to see if
those singles are filled in.
What's that?
That tail, those singles are filled in now?
Where?
From D. You were talking about a little bit.
Yeah, right. And now my guess is it's going down to 67, because this way we'll have three. We'll have three across. Okay. Now this becomes interesting for me. Okay. Because once I get 4 across, if this goes down and we get 4 across, now is it going to go back and start taking all this stuff back? And when you talk about unfinished bottoms, right? Here's an unfinished bottom. What have we been getting? Two-sided trades, which I said today. I think we're still going to get a two-sided trade, but it's going to take some failure at the top. We already went to the high volume nodes, took out the 1.5 times the IV range, and the market stopped. Right? So now under 67, it gets interesting for me. Right? But my real thing is 58.75, 1958.75, is where the 5-minute pivot's at. So, we could get to 67 and just bounce off of here again. So those are things that you have to kind of be aware of. And here's the other thing. Just because you wish it, okay, right? Just because you wish it doesn't mean it'll happen, right? If you look at my rules of trading, my 10 most common mistakes and rules you got to follow, there is no wishing, praying, and hoping. This is what the market looks like. So if I would use this as a trading tool right now, okay, and said, okay, well, this is gonna, I could put a trader 68 quarter, I'll pick up a point a quarter. All right, it stopped. It stopped right here. All right, I'd be short to try to make 100, 75 bucks on a one lot or whatever that is. it'd be in my face, okay, because I use this as a trading tool. I use it as a barometer and gauge it with all the rest of the things that I look at. That's the key.
How much weightage do you give to overnight action from profile point of view? Clearly, last week has been very important, but during normal days, is it important?
Yes, I look at the overnight action, and one of our tools that we use and we talk about all the time is that you have to take out the Globex low. Now, granted, the Globex low was way down here, right? Well, here's another thing too. I don't know if I put this. I'm going to change. Since we've been having big ranges, I've been using this. Oh, it's changed. Okay. Definitely, right? So one of our rules of thumb is that you have to take out the Globex high by at least 5 ticks. And if you do that, then the market is moving in that direction. Okay. If you don't take out a Globex high or a Globex low, and you get up to and you fail, usually that's an indication that the market's going the other way. So those are the things that I look at. Globex high and low are important for me. Now, remember, the important thing is the market always has to go back to where its daytime hours are, and that is the daytime.
Can you talk about how you incorporate Bookmap?
Well, Bookmap, I haven't had it up running. There was too much drain on my on the overload. But when I do use Bookmap, and I will now that the markets will slow down a little and it doesn't drain it up, I use Bookmap to look at where I see big orders. Now, the problem with this week was that with the algo was off, I wasn't seeing it, right? So I figured not to have it on, but I always look at the Bookmap to find where there are support and resistance, and I see where people have placed orders that aren't being spoofed or canceled, replaced. They're sitting there. They're a long-term player. They become targets. That's how I use Bookmap.
All right. Naveed, he said that he almost blew on the account back in July. He wants you to talk a little bit about your psychology to overcome something like that.
All right, Naveed. All right, whatever it is. I have one rule: thou shalt not shoot thy wad. Right? You have to trade with the idea that you're going to come back and trade another day. Okay, and you probably were over trading. You were chasing the losses. You were worried about the money. I tell everybody all the time. And the problem with domes are, like when we were in the pit, we didn't really you couldn't visualize how much money you were down or up. You just knew you were down or you knew you were up. The problem with the domes nowadays, it tells you you're down, you're up, you're down, you're up, you're down, you're up, right? So I always tell people you have to be able to put a trading plan on with a stop and a price objective, and keep your eyes off the dome. Because when you put your eyes on the dome, this is what happens. You put it. It's very rare that you buy a high or sell a low. Very rare, right? So you're not going to be able to just pick the bottom and pick the top. You're gonna either scale in. So let's just say you're using 2 contracts and you scale it. So, and this was your plan, that you had to buy it, right? So let's just say this morning your plan was to buy the bottom of A, right? So you went there and you bought 59.5, okay? And you were to buy, let's say you're going to buy the overnight mode of 57, okay? So you bought it, and now you got an average, and you say, okay, I'm going to stop myself out if the market gets on the 5-minute pivot, which that has been a 700-point stop, right? Or, okay, so that was your plan. Or I see the market get under 55 or 54, right? So we go down and we make a low of 56.25. Your dome is telling you, okay, and my objective was that I think it was going back to the highs, right, at the time, which was 69.25. and I start doing my rotations. I get past the rotation, right? One of the things you can do is now you get past your first rotation, take one off at the second rotation, right? And then you got a runner that keeps going. So what happens is that people put these trades on, the dome goes against them, they're in a loss, and they know that they're objective because they've calculated out where they think it's going to go, and they get even or up a little bit of money, and the first thing they do is they get out of their trade or get out of a one lot, and then the market takes off and goes the other way, right? And we've got an indicator that we're going to build that's going to help you guys with that, because you're going to see that what happens is that a lot of you just take a lot of heat on a trade, get back to even, and just get out. So that's sort of the market psychology. Like dome, like when we were in the pit, I had someone who counted my cards and also counted my money, right? I could tell by her face what I was doing. I knew where I was at, but it didn't change my trading methodology, because before I got down there, I was already doing all this stuff that I'm now doing for electronic trading. I had support, resistance, where I wanted to buy it. And then I was using the market flow from the orders coming in, right? The market coming in, I was using that order flow to help kind of reinforce where our opinions were. You know, this is what it bothers me about all the exchanges that allow the high frequency people and the spoofing, putting the bullshit orders in and out. You know what? Make it a pure market. Give everyone the same advantage. Slow down the latency. Let everybody have the same opportunity. So that's where I'm at. I hope that answers your question.
Do you watch VWAP?
Yes, I do. So we also is another thing that we didn't develop it, but it's ours. You know, so we've got a dynamic VWAP. You see it right here, and it's telling me it's green. All right, and then what we've done, if you look at this sort of beige here, okay, that's two standard deviations from the VWAP. Okay, so we look for tops up there. So look up here, right? This is stuff that we've programmed into our stuff right here. So we got above this VWAP. I'm thinking over. I got here. I'm looking over here. I got oversold, right? So these are the things that you have to, you look. So I do watch the VWAP. Same thing on the downside, right? Look, here's the VWAP. We got into our exhaustion dots down in here, right? So this was two standard deviations. This also corresponds with where we would have bought it. What am I looking at? This is the wrong chart. I was thinking, what the hell am I looking at here? That's the wrong chart. Let me put our chart up. All right. Okay. Let's take a look at the same thing. VWAP. Here's our standard. Here it is, and we got it when it's green, when it's red. Now it's green. It's been green, right? So here's the market when it opened up. So actually, it's been green since like 1 o'clock in the morning. So here it is. Okay. All right. The market opened up. We got our retracement. Now, we never got back to the bottom of the VWAP. You can see it here in green. All right. But we've gotten to the top of it. Right. So we've gone from the VWAP to 2 standard deviations, the VWAP to 2 standard deviations. And the market is kind of sitting in between there. So now look at these things that we're talking about, right? If the market moves back below 57, will we get below the VWAP? Will we go down and test the bottom part of the VWAP? Or are we going to wait, is that going to take 2 days to do that, right? Or are we going to do it in bracket L today, bracket M? Because we've had those big movements in bracket L and bracket M. So yes, I use the VWAP. But these are all things like I've got a partner who's incredibly talented. He's built these tools, and when I have a bad day, it's not because the tools were wrong. It's because my brain was wrong. This is telling me this action now is that This is telling me we're still in an uptrend. I think the market's going to make a late market move on the upside. As long as we stay above 67, I think the market's making a late market move to the upside.
Explain what your middle zone is.
It's sort of a calculation of the first hour and a half of trading. Well, actually, first hour and a half of trading. I come up with a calculation. It's proprietary, but I'm sharing it with you as far as you can look at it. I'm not going to give you everything, people. I can't give everything away.
Got them all.
Huh?
I think you pretty much covered everything.
All right.
We got about 5 minutes.
5 minutes. Let me think here. Quick story from the pit.
Story from the pit.
Story from the pit. I got to come up with a new one. I haven't really. Let me think. One that would, I think I've told the story about. Let me think. I don't know. I'm at a loss. Anybody want to have maybe they've read my book or know a little bit about me, want to ask for me to tell a story again? I can tell you what it feels like to make over $1 million in 30 seconds.
That'd be a good one.
That was fun, right? So
I have a question.
Yeah.
Did you ever go back and get that watch?
No, I never went back to it. I never went. I bought it here.
Oh.
I bought it here. It was cheaper. I didn't have to make the flight.
Yeah.
I tell you what, it's really fun to be surrounded with Luke and Anthony because number one, they're talented young men, and they're like sponges. They want everything. They keep me in line. Sometimes I do things and they look at me and go, "You told us never to do that," right? So it's important to keep young people around you. They're so computer orientated, and this market is just going to get more. And as we build more indicators, I mean, they have so much input with their programmers and so on. And part of them going forward with Mom will be, if you have indicators and things that you would like to have us test and put out there, we will help you with those things because we have the programming capability to do that. So that's one of the things that we're going to do.
I don't know about your Rolex watches. I don't know what Rolex watches you have.
I don't have any. Who asked that question?
Culture horse.
Yeah, I don't have any. I don't have any watches. Yeah, that was the big thing on the floor. Everybody had a Rolex watch. If you had a Rolex watch, you made it, right? So the first thing guys did when they made money was they bought a Rolex watch and a Mercedes. Well, you know what? Good thing the market was a little slower today. I'm telling you again, I still think it's, as long as we stay above 67, that the market will be, a slow grind up for the rest of the day. And if not, if we get under 67, I'd be, stay with us on Twitter and we'll let you know if we see things turning around the other way. We got, I'll do a couple more of these, but we're really working on rolling out our new programs. And as soon as they're rolled out, we'll get them to you, and it'll, help you with your trading. Hopefully what we do helps you with your trading. And, look, this is a business. You get the highest highs and lowest lows. I've seen them all, right? I've seen actually, I never had a losing year, all right? But I had a year where I broke even, right? So, and I've had years where, I've made, $4 million and more. So it's just, it's a great business. everything goes through a metamorphosis and some sort of change. This has gone through its change and still has changes to come. And I think that staying on top of it, and especially the young millennials, I mean, this is a great opportunity for young millennials because, you know, they like the idea of being responsible for their actions, and you know, they want to contribute. So, you know, the program we have is going to be gauged at everybody, but really it's going to for the younger kids who want to get into trading. And so, you know, we'll be rolling that out. All right. So everybody, thanks for all your attention and your time. Hopefully you got, you know, a pretty good idea. And you know, the rest of the day, I'm looking, just so you know, if we keep moving up, which I think we may, as you can see, right? We got these targets right here, these single prints, right? 80 and 81, and then 2 times the IB range is 82.5. Above that, it's anybody's guess. All right, baby. All right, everybody. Good luck. Talk to you later.